You are lending out of your freaking LLC and you're paying a 30 or 40% tax on your gain. And so did you really make 14% that year on your money? Hell no, you made like 9%.
Exactly.
When inflation is 6 and 7%, guess what you actually made? You made 2%. Whoop de freaking do.
When you make money in this account, you don't pay taxes. You're building it and growing it over 10, 20, 30 years. But I'm saying if I did this out of my retirement account, which I do, I make 14%. No, I really made 14%. I didn't send the IRS or the state anything. I kept everything.
I've got one of my good friends here, the gentleman who helps a lot of people buy their businesses with creative finance. He's Matt Sorenson, the guy who's behind the scenes in a lot of my business transactions. He's also my tax attorney, and he also does a lot of self-directed 401k, IRA, all of those types of things. So super excited about that today. Some of this I'm getting educated on myself, and other parts I know really, really well. So this has been really fun for me too.
I was just saying, man, I was trying to come in hot. I was like, I'm so excited for this.
You and your team has helped, I don't know, half a dozen or more Subto students close on creative finance business acquisitions in the last couple of months, which has been a lot of fun.
It's cool to use a lot of these strategies and things I've taught people how to do. I've worked on so many business deals, but then, man, your people like take action like the next week. We're like, someone's buying a business, someone's selling a business, and they're all over the place, different businesses, industries. It was super cool.
Thank you for saying that, dude. Now, and what I love about hanging out with you is you're not a regular attorney. You know, you've hung out with attorneys that you're just like, bro, you're boring. Then on top of it, he has been the only person that has been able to break down 401ks, IRAs, and everything else to me, IRAs. And tonight we're going to be talking about some of that stuff. Who in here is curious about self-directed money? How can you raise money for your deals? How can you make money tax-free on real estate transactions or lending transactions? Perfect. That is what we're going to be talking about tonight. Matt, you've told me this number before, but how much money is in retirement accounts in the United States?
All right, hold on, guys, because you won't believe this number. It sounds weird. $33 trillion is in U.S. retirement accounts. Like, the only time I use the word trillions is when I talk about this. But if you think about it, there's more money in U.S. retirement accounts than any other spot. So if you're like thinking about how do I fund deals? How do I get money on a business or a real estate transaction? Guys, all the money is sitting in U.S. retirement accounts. And the cool thing is, it's not a bunch of rich, wealthy people or a big hedge fund you got to persuade or some bank you got to, twist their arm. It's all of us. It's everybody. It's everyday Americans that have a sliver of this $33 trillion. They've just been told your IRA or 401k can own a mutual fund or stock. Like Wall Street's brainwashed them. Good for them. That's their business. They sell that stuff. They want you to buy that when you have an IRA or 401k. But that's not all. Your IRA or 401k can own real estate and these other cool assets, and we can talk about it. But 33 trillion, that's what's on the table here.
$33 trillion is on the table. So the question is, hey, Matt, I have no money, but I want to do a real estate transaction. I've got some experience. Yeah. Where should I go and tap into money that I could use to fund a real estate transaction?
There's people that have retirement account dollars, and even like our company, Directed IRA, like we have a $1.5 billion of assets here. We have 14,000 account holders. We're adding 30 to 40 new accounts a day. Like, this is a day we're adding. These people are looking for opportunity. They have money in retirement accounts. Some of them already have a deal lined up. They're looking for someone who has an investment opportunity. They're not interested in a mutual fund. They're like, I'm done with that. They like real estate. They like small business, and they want to invest in these assets. And so it's kind of this great place where this 33 trillion of dollars can meet opportunity out there in small business, in our communities, in real estate. So I like to help people figure out to understand this strategy so that they can access this capital for their own deals. So if you need money to fund a rehab, right? I mean, you can use a lot of creative finance strategies in real estate to acquire properties, but you're going to need money sometimes. And the easiest place to access that money is this $33 trillion sitting in U.S. retirement. If you just think of the people you know, think of the 10 people you would go to. If you're brand new at raising money, I'm just telling you, you need 100 grand, is much more likely you're going to get that out of their IRA or 401k than they're going to have it in a savings or checking account.
So Matt, check this out. This is a really good statistic. So I, for the longest time, have just been acquiring real estate on my own. We'll do, temporary gap lenders on deals. I had no idea where the money was coming from. I just was like, oh, it's coming from these humans. Okay. It's just coming from these humans. Then when I meet you and you start telling me the $33 trillion and that most of the money, I start looking at where the money's coming from. It's like 90% of people that are funding my real estate transactions are doing it through a self-directed of some sort. And so I then go and we launch our fund, right? Subto fund. We go launch this fund. We buy our first $20 million asset. We have 60 accredited investors in this deal. What percent do you think of those accredited investors used their self-directed money to invest in that deal?
50%.
It's like 80 something percent.
Are you serious?
Seriously, yeah.
Wow.
And so it was like a mind numbing number for me. I was like, why was I not realizing that this is where all the money in America is locked up?
If you think about it from someone, think of, you know, like you're raising capital, someone there that's got a deal they need money for. People with their retirement account, the nice thing I like about it is, from the perspective of someone raising money, is they don't want that money back. I mean, they want it back, but they're like, hey, keep it invested. They're not like going to bug you next month or 6 months. This wasn't the last 10 grand in their bank account that they gave you on a deal. They're going to bug the heck out of you. They want it invested for the long haul. Retirement accounts, right? We're growing and building those for the long haul. And this 33 trillion out there, people access it once they're 59 and a half. That's when you can access it. So a lot of people who raise capital love it because it's long-term money for people. They've already thought in their brain, okay, I'm going to invest this for the long haul. You need it for 5 years. You need it for 10 years. You know, even me, I just have my own retirement account. Guys, I do this. I lend people money from my retirement account to do those. Like, let me just show my screen here. Can I share my screen? This beautiful gem is in Providence, Rhode Island. I have a lot of clients there and real estate deals and stuff I got going there, but it's just an operator I know raising capital. It's a, you know, but I got 12% interest in 2 points. For me, that's a 14% annual return.
Yeah.
It's a 6 month to 1 year loan. I can double my money in my retirement account every 4 to 5 years at a 14% annual return.
Yeah.
There's no way in heck I'm going to do that in the stock market. And this is another investor friend of mine that needs money for a deal.
I don't even care about the return. Here's what I care about. I do care about the return. What I care about is keeping the freaking return, because it's not about how much you make. It's about how much you keep. And what Matt is doing is, Matt, here's the problem. When you're lending outside of your IRA or your self-directed 401k, guess what's happening? You are lending out of your freaking LLC and you're paying a 30 or 40% tax on your gain. And so did you really make 14% that year on your money? Hell no, you made like 9%.
Exactly.
And when inflation is 6 and 7%, guess what you actually made? You made 2%. Whoop-de-freaking do, right?
Yeah, exactly.
So I think the powerful thing about what Matt's going to talk about, and I'll let you ask some questions about this, Heidi, is how can we as a community utilize Directed IRA, their company, that's the name of their company. What he's trying to do is say, hey, I want you to lend money, great, in whatever avenue you want, but you should have some of it in a self-directed so that you can go out and keep that money growing and compounding tax-free. Is that where you were going, Matt?
Yeah. And let me break down what a self-directed IRA is. I jumped the gun there. I was telling you just a cool thing. I want to put it in perspective on what you
We're okay with jumping the gun. We got 800 smart people in here tonight.
Okay. All right. And I know some people are like, I'm already doing this, Matt. I'm familiar with the strategy. Some people are like, dude, what are you talking about?
Let's go through it.
All right. Reader's Digest. Okay. An IRA or 401k in general, just to keep, I'm going to get to generally, and we're going to build on this, right? You put money in it. You put money in it every year. You can put money in your IRA, or you have a 401k. You've got this money set aside and you can go buy investments. And the government gave us a deal and said, all right, when you make money in this account, you don't pay taxes. You don't need to put it on your 1040. If you got a mutual fund with some dividends, you bought some Apple stock and you sold it for a gain, don't put it on your 1040. The deal is, this is growing tax deferred if it's a traditional account, or tax free if it's a Roth account. Tax deferred meaning when you're 59 and a half, you can pull it out and you pull tax, you pay taxes, you pull money out. The Roth account's tax free. You're building it and growing it over 10, 20, 30 years, you know, till you hit this 59 and a half age where you can pull money out. But the money comes out of the Roth tax free. But the cool thing about it, the deal is, if you're using this special account type, you don't pay taxes, you're building the money. So when Pay says, okay, you lent money at 14%, but you paid 30 to 40% tax, you really only made 9. But I'm saying if I did this out of my retirement account, which I do, I make 14%. No, I really made 14%. I didn't send the IRS or the state anything. I kept everything. And if you think about investing your money, and the rule of 72, if you guys know that, 14% return, I'm going to double my money every 5 years. And that is so powerful when you think of growing your money.
Think about what's actually happening there. He makes 14% in his first year, which now has added chunks of money to his retirement account, which gives him more money to lend to make more 14% on next year. And it compounds and compounds and compounds. Whereas the person who is lending outside of these accounts is only at the end of the day making 9% and only compounding at 9%. It's not just the difference between 9 and 14%. It's the difference between the compound of those every single year. And so you'll make triple, quadruple, 10x the amount of money by keeping it. Now,
God, it just makes so many things make sense. I don't know how you said it or what you said about it, but like, I finally get it. Thank you.
No problem. That's my job. Can I also highlight something? There's a really good question there. Matt sets me up an account. Okay. Whether it's a 401k, an IRA, I don't know the difference. He's actually going to have to tell me the difference. I put money in here. Okay. Who receives that money is actually directed IRA. His company receives this money, correct, Matt?
Right. Yep.
Okay. So let's say
qualified custodian,
a qualified
audited
custodian.
and regulated, guys. Don't worry.
So then what I do is I request it to an LLC, and I can take that money into an LLC and then lend that money to a fix and flipper.
Exactly.
Right.
Yep.
And I can use that money inside this LLC multiple times. I don't have to pay it back every single time I do a deal. It can stay in that LLC for probably what, up to a year or so?
As long as you want, until you hit 59.5.
You're lying.
Money out.
You're lying.
Yeah. You don't keep it invested. You leave it in the LLC. Go do the next deal and the next deal.
Once the money goes out. So Matt, how much money, let's say if I'm a normal human being.
Yeah.
And I don't have a big company like I do. I'm a normal human being. How much money could I put in my account this year?
So, okay. Now IRAs, new contributions, you can put in $6,500 a year for 2023 and 7,000.
Okay.
Is what it goes up to for 2024.
And that's for what kind of account?
That's an IRA, a traditional IRA or a Roth IRA.
Okay, cool. Traditional or Roth. Got it. Yep. So what about
now if you're self-employed, let's say you're self-employed.
Which everybody in here, it basically is self-employed.
Yeah. You can do what's called a solo 401k.
Okay.
And put 66,000 a year into it.
What? Yes. Okay, cool. So I can put 66,000 a year into this bad boy.
Yep.
Which means
I
can
have
then
income. Obviously, you got to be making enough money to drop that much.
I got it. There, like, let's say I'm
rolling.
Okay, so I put the money in here. This is where the money is now sitting. Does everybody understand? It's now sitting at the custodian, directed IRA. Does everybody understand that?
So everybody knows we're tracking all this for IRS purposes. We're going to do the IRS filings on this to make sure it's compliant, just like Fidelity would if you put money in your account there and you bought stock. Like we're doing this custodial piece for it and doing the tax compliance.
Okay, cool. So I go get a solo 401k because I'm self-employed. I put $66,000 into directed IRA. You guys manage, do all the things. That's great because you're a custodian to do this. I then ask you, I have to send a request, right? It's like a one-page request.
Yep. We call it direction of investment. You're going to authorize it on how you want to invest it.
Okay. I'm going to tell you where to direct my money because that's my money, not directed IRA's money.
Exactly.
And we're going to put it in my LLC that maybe does lending, or let's just say it does hard money lending.
Yeah. Now this is a unique LLC. Okay. This is not your LLC that you do personal deals in, or, this is a separate LLC that your retirement account owns. Remember, this is not going to hit your 1040. You don't own this LLC. Your retirement account does, your IRA does. Okay. And you can't put money into the LLC directly. You can't take money from the LLC because the LLC is going to have its own bank checking account. It's just kind of a regular LLC business checking account, but you don't own it. Your retirement account does. So it's all got to go through us. But once the money's in the LLC pace, and you're like, all right, I'm investing it. You keep it in the LLC, grow it.
You guys call this a checkbook, basically a checkbook LLC, right?
Yeah. People call it a checkbook IRA LLC.
Okay. So we call this a checkbook LLC, which means I don't own it, but my retirement account does. So this retirement account that's up here owns the LLC down below. So now I have the ability to write checks and send money and do the things. And I can go decide I'm going to lend money to, let's say, Lindsay. I'm going to say, Lindsay, you need to buy a house in Arizona and you need to move your butt to Arizona. So I will give her a loan for $60,000 at 12% interest, let's say, for a temporary 6-month gap loan.
Let's negotiate, Lindsay.
Okay, let's negotiate. We'll go to 18%. Okay, we're going to go to 18%. I make the money off that. It goes back in my LLC. Do I have to send that money back to the retirement account at Directed IRA, or can I just issue another loan immediately?
Just go another loan immediately. Keep rolling.
Does that break, guys? Honestly, I'm going to tell you right now, that is what all these IRA people are dumb about, because they think we're smart. I'm not smart.
You talked about people starting from zero.
Yeah.
Okay. And this is a lot of real estate people, right? You're like, hey man, I've been self-employed. I'm a real estate guy. I haven't had a W-2 job in corporate America with a 401k. I've just done real estate full-time my entire life. And so I didn't work at Dunder Mifflin and get the Dunder Mifflin 401k plan, you know? So you're starting at zero. But that $33 trillion I mentioned is already in US retirement accounts. Many of you listening right now already have a chunk of money in an IRA or 401k somewhere. Here's the problem. People be like, all right, Matt, I listened to you in Pace. You said I could buy real estate with an IRA or I could lend on a real estate deal. And I called up Fidelity and I said, I want to buy a rental property with my retirement account. And Fidelity said I can't do it. Well, that's not because IRAs can't do it. That's because Fidelity IRAs can't do it. Okay. Fidelity is a broker dealer. When you have a retirement account with a broker dealer, they only let you buy what they sell. It's like you walked into McDonald's and said, can I have a chalupa? Okay. McDonald's is going to give you their menu.
Bro, don't give, that's such a good analogy. I'm writing that down. Don't give me stuff like that. I'll steal it.
That's fine. You can use it. I give express written consent.
That's so good, dude.
I know, right? But it's true. And I think a lot of people don't realize that because Wall Street has just told us what you can own in your retirement account. And then the insurance industry, like let's say you have an IRA or 401k at Northwestern Mutual or New York Life. It's like, what do they let you buy with your IRA? Insurance products or annuity, because that's what they sell. So if you try to buy real estate there, they're going to tell you no. So you just need to move your accounts. So for many of you out there, this $33 trillion that's in US retirement accounts, a lot of you have that already. You're not starting at zero. And I'll say 9 out of 10 people that open an account at Directed IRA are in this category. Americans have just been told to save in a retirement account. You had one at a job 10 years ago, or even in your current day job, or your spouse has got one, you know, or you've got an old IRA sitting around. You can just move it, transfer it from Fidelity to Directed IRA. And now when you move that account to us, we're going to say, all right, you want to go buy a rental property? You want to invest it in that LLC structure where you can have checkbook control? You want to private lend it? You want to invest it into a fund, doing a bigger deal where you're participating as a smaller partner? All these assets are assets you can do with an IRA when you're at Directed IRA. But when you're the broker dealer, you're on the McDonald's menu.
Heidi, I've got you up here. You asked a question. You said, can we talk about self-directed 401ks? Did you have anything specific? Because we can guide Matt.
Yes, I do have a question. Thank you, Pace. Thank you. Thank you, sir. Okay, so I really need to understand the flow from my solo 401k, and then it goes to what I think you said was a LLC that is owned by the 401k, or was that for IRA?
Yes, your directed account.
Same for both. Okay. And then now when I lend from the LLC, then there is a certain percentage that's like, you have to give it back at some, you know, like it has to.
Yeah, you're lending it to someone else that's another investor. So let's say, don't think of you're not lending it to yourself. So you're playing, if you want to use the IRA to do
Heidi, do you know what,
lending.
Matt, you know what she's thinking?
I can't be involved at all. I can't only lend.
Matt, I think she's, sometimes people get like infinite banking confused with this, where they're like, oh, I'm going to lend it to myself and I'm going to pull a loan off the thing. Heidi, this is your money. This is your money. There's no, you're not pulling a loan at all. Okay. There's a difference. Okay. Infinite banking is you are buying an insurance policy. And when you lend money in your infinite banking, you are borrowing money against that insurance policy.
Okay.
That is this. Directed IRA, okay, is your money. It sits in this account. Your account at directed IRA goes down, like we said in this drawing. You send the money to your directed IRA account that Matt's company's in charge of, and they're the boss of this, essentially. You send them a request. This is not a loan. You send them a request and say, it's my money and I want it now.
Okay.
Little JG Wentworth.
JG Wentworth, and the money goes into your LLC. And then at that point, there's no cost to loan. You're not loaning money from yourself to yourself here. Does that make sense?
Yeah, got it. And
you're just moving it into a vehicle that you can now lend money out and make 12% plus 2 points if you choose to do so. If you're a Gator and you're doing a Gator deal, you might make 30% on a deal very, very quickly. That money goes back into your LLC, and guess what you have? You now have more money to lend out of this LLC on the next deal, and the next deal, and the next deal, and the next deal, and the next deal, the next deal, the next deal, right?